Hey, what's up, my friend? So, welcome back to this week's market analysis. I'm basically down with a flu, so you'll probably find that my voice isn't the usual voice that you've been hearing, and you'll also hear me cough a few times, in this video because I'm having a cough as well. The cough, the running nose, the tears, everything's all just hitting me at once. So that's it, right? I would say, just bear this in mind that today's video would be a how do you put it across? A little bit more rougher than it should be, right? So that's it. In today's video, I want to talk about counter trend trading, right? Because I want you to know that I'm a trend trader, right? But sometimes when I take trading setups, traders would find that I'm actually taking a counter trend setup. So I just want to put things in perspective, right? Counter trend is counter trend and trend trading is all a matter of perspective. It's all a matter of the time frames that you're on, right? So let me explain what I mean by this. And on top of it, I want to talk about how actually this kind of counter trend setups can actually yield you a very favorable risk to reward. Okay, so the first thing that I want to talk about is the euro against the Aussie dollar. So I think this is a good example, right? You know that this is an area of support, right? Right, I'm sure you know what's an area of support, right? It's where potential buyers would come in and push price higher, right? So this is an area of support. Price tested once, they traded higher, came back lower, tested once again, traded higher, tested a third time, traded higher, came back a fourth time. It bounces off slightly higher at this point in time. So the thing to understand is a lot of price action traders, what they'll look for is they look for a pin bar, an engulfing pattern in this area of support, right? And it's not wrong to look for this kind of price rejection, but I would say the biggest problem with this approach, this approach of memorizing candlestick pattern, right, is that you may miss move in the market, right? Because you're waiting for that particular pattern to occur, and if the pattern doesn't occur, you end up missing the move. So something that you can think about is to learn how to read the price action structure of the markets, right? So for example, on this daily time frame, okay, you just know that there's a very slight consolidation in this area over here. So what you can do is that you can go down to the 1 hour time frame, right? You scroll back a little, and let me get rid of this line over here. And this consolidation you saw over here is basically the 1 hour time frame consolidation over here, right? The consolidation you saw on the daily time frame earlier, which is this portion over here, is basically this one over here on the 1 hour time frame. So at this point in time, right, what you can look for is to look to trade the breakout of this high over here, right? Because if this market were to break out of this consolidation, chances are is that you can expect higher prices. And at the same time, you understand that on the daily time frame, it is coming into an area of support. So you have numerous factors coming into this trading setup. Number one, you have this consolidation over here, and if price were to break out of this consolidation, you know that there could be a further price advance, right? That's one. Second thing is that you are at an area of support on the higher time frame, which is the daily time frame. So there are, these two factors that is basically in your favor, right? But to the new trader, they may just look at this chart and say, oh, Rayner, you're just taking a counter trend setup, right? Look at this trend on the 1 hour time frame. It's a downtrend. You have a series of lower highs, lower highs, lower highs. And right now, if you're going long, you're basically taking a counter trend setup. So like I've said, right, it's all a matter of perspective, right? If you know where you are in the big picture, then this isn't really a counter trend setup because you're just basically entering your trade based on the bias of the higher time frame. Okay, so this is basically my point I'm trying to bring across, right? You can call this counter trend setup, but to me, I don't treat it as a counter trend setup because eventually, right, I'm actually trading along the path of least resistance. I'm actually basically trading along the structure of the higher time frame. Okay, so the good thing about this is that you don't have to wait for a specific candlestick pattern like the pin bar or engulfing pattern, right? Because you're just basically reading the structure of the markets. Because if you look at this, what the market is telling you is this, right? Is that price, no doubt, in the 1 hour time frame, we have this lower lows and lower highs. So it's in the downtrend. And after which you have this period of consolidation over here. So this tells you that the bears are trying to push price higher, but they just couldn't, right? They found an equilibrium, right, in this area of congestion, right? The bulls and bears are basically in equilibrium. then who will become the winner? You have no idea, right? The first clue that it's telling you that the bulls are starting to take control is when they manage to break and close above this area of resistance. That's the first clue you can get, right? Other than that, if price is in this area of congestion, your guess is as good as mine whether the bulls will win or the bears will win. So it's far better to let price tell you what to do, right? When it has actually broken out of the range before you establish a position. Okay? So another example that I can share with you, right, a potential setup that I'm looking at this coming week is this market over here, New Zealand dollar. Okay, let's apply this same concept, this same principle, right? What is the trend on this time frame, the daily time frame? It's an uptrend, and price has right now come into this area of support, right? Tested once, twice, and right now it's hovering here on the third time, right? So we have this area of support. Go down to the 1 hour time frame, right? You look down to the 1 hour time frame, you can see that you have basically a series of lower highs, lower highs, lower highs, lower highs, lower highs, and consolidation over here. So again, we can apply the same principle, right? We don't want to enter our trade too early. We let price dictate when should we enter the trade. So if price can break above this highs over here, let me withdraw this. If price can break above this highs over here, then chances are the bulls are in control and we can expect higher prices, right? So this may seem like a counter trend setup, but again, look at the big picture, right? On the daily time frame, where are we? We are basically at an area of support in line with the longer term uptrend. Okay, so this is something for you to really think about, right? That trend trading and counter trend trading is really a matter of perspective. And last but not least, I just want to share with you another thing that caught my attention is the chart of natural gas. So natural gas, right, you can see that on the weekly time frame, the recent move over the last few months, right, has been pretty bullish. Right? You have this strong up move higher. Then on the daily time frame, what you see is that price has basically formed a potential flag pattern at this point in time, right? So a flag pattern, it basically looks something like this. It price rally higher, then it starts to consolidate and trades a little lower, and then it continues its upward move. So this portion over here, this correction is what is known as a bullish flag. So on this chart right now, I'm seeing this pattern, right? A bullish flag, right? With this strong impulse move higher, and right now price has retraced lower, right? And on Friday, it has actually break and close outside of this downward trend line. So this is a bullish flag pattern, and it's a pattern which is a bullish pattern, and you could possibly see higher prices in the next few days or few weeks, right? So a bullish flag pattern on natural gas, and is something that is worth looking out as well. So that's it, right? That's all I have for you in this week's market analysis. Just want to share with you a few, the counter trend and trend trading setup, as well as this bullish flag pattern that I'm seeing on natural gas. Maybe I'll just complete this natural gas setup, right? So how you can look to enter is this, right? There are many ways to enter, right? So for flag patterns, some traders will wait for a break of this. For more aggressive traders, they wait for a break and close above this downward trend line before they get long. For more conservative trader, what they'll do is they wait for price to break above this high over here before they get long. So again, there are pros and cons to both approach, and there's really no right or wrong. Ultimately, it's more of your own personal preference, whether you want to be early into the trade and risk getting a false entry, a false signal, or would you rather enter later to increase the odds that the signal is more reliable? So again, there's always pros and cons to both approach. And as for stop loss, right, I would say a logical stop loss to be placing is below this low over here or this low over here, right? So this is some ways that you can actually look to trade this bullish flag pattern. Okay, so again, right, regarding to the exits, right, taking profits, this really boils down to what kind of trade you want this to be. Do you want this to be a swing trade, or do you want this to be a trend following trade whereby you're trying to ride the trend? If it's going to be a swing trade, then you can just take your profits at the possibly at the nearest structure resistance, right? If for example this over here, I see a possible structure resistance. If you go long on the break of this trend line, this is an area you can look to take your profits, right, as a swing trade. If you are a trend follower, you can look to trail your stop loss using a moving average, for example the 20 period moving average or the 50 period moving average, right? So I think this is really very important considerations, right? It all boils down to what type of trade this is that you're putting on, and then you have the correct techniques, right, to manage those trades, right? Because it doesn't make sense. For example, if you say that you want this to be a trend following trade and then you look to take profit at this high over here, it does not make sense because you're basically, capping the upside of the move. Okay? But if you say that this is a swing trade to you, whereby you just want to take a swing in the market, then exiting at these highs would make sense because after all, you are just taking a swing in this market. So I think it's very, very important to really understand what kind of trades you're putting on, whether is it a swing trading setup or whether it's a trend following setup. The main difference between these two is how you're going to manage your trades. Okay? So, okay, I'm going to, stop right here for this week's market analysis. The voice is it's getting more dry in my throat, right? So I hope this helps, right? If there's anything, right, feel free to let me know in the comment section below and I'll get back to you. And with that said, right, if you want to stay updated to my weekly videos, feel free to hit the subscribe button below and I'll talk to you soon.